And that is 3:00. Well, 3:00 in some countries anyway. So good afternoon, everyone, and welcome to the Class Foundation Market Update. The sun is shining. Well, it is here anyway, and I hope it is for you. And we are really excited to have you all here and have such an amazing lineup today. My name is Kellyanne Watson, and I am the Head of Programmes here at the Class Foundation, and I am very excited to moderate this discussion. So before we get started, I'd like to take the opportunity to thank our partners. It's been a real tough 12 months for us all, but your continuous support has made events like this possible. We would also like to say a real special thank you to to GSA, Global Student Accommodation, for being a gold sponsor, and also DoveVivo, Smart Studios, StarRez and Student.com for being our silver sponsors, and also to our fantastic media partners, The Pie, All Things Urban and Study Travel. We founded the Class Foundation 10 years ago, which was named the Class of 2020, with the aim to collaboratively solve student housing crisis during an economic crisis. We grew with the community as a European think tank, shaping the future of living, working and learning in university cities. We successfully graduated in 2020 and now have established ourselves with a shiny new branding, the Class Foundation, as you know us all now. I'd like to say a special thank you to our team, Evelyn, who is the Head of Marketing and Comms, Manuel, Head of Partnership, and Frank, who is our co-founder. We are a small but passionate team. So we've had a lot going on this year, and we've been working really hard to create some programmes and opportunities which will enrich our community. I'm really excited to share our academies with you. Our first ones were the Community and Resident Wellbeing and PropTech, and our up-and-coming ones are Spatial Design, Investment and Valuation. These learning experiences have been created by experts in a blended learning format to suit people and teams wanting to learn more in our sector. If you head over to theclassfoundation.com, you can still register for the final 2 academies, but spaces are limited. So now over to the market updates. This session will focus on student housing acquisitions, investments and performance within Italy, Spain, France and Portugal. We will explore demand and the outlook for 2021 and future trends. The class understands significant investment transactions are happening within these regions, but with looming uncertainty due to COVID, concerns around under and oversupply and student numbers, what will our experts think of this topic? Just a little bit of housekeeping. If you would like to get involved with this session, we would love to hear your questions via our app, which you are now viewing on Swapcard. You can also use the platform to network with each other. We will also post some polls to get you started. So you might see some of those kind of popping up now. You can use the tab section that says polls. We would also love to hear from you post-event. So please make sure you're at the Class Foundation and start a conversation on LinkedIn and Twitter. Okay, so enough from me. Marcus Roberts, the Director of Savills, will now present a 10-minute overview on levels of investment, deals and transaction volumes in the student housing, specifically within our outlined regions. Marcus, over to you.
Good afternoon, everybody, and welcome. And thank you, Kellyanne, for that introduction. Marcus Roberts, I'm Director in the Operational Capital Markets Division at Savills, with responsibility for the European countries, everything from Ireland, Czech Republic and Nordics through Italy and Greece. So I'll give you a quick 10 minutes or 8 to 10 minutes, I think, on what's been happening in those 4 key jurisdictions. It says that's not sorry, hopefully this will, there we go, a reason for optimism in 2021. I think what we show here is the increasing appetite from new market entrants into new geographies and into the Southern European markets. I think this has been an overwhelming underwriting of the student housing sector in sort of an 18-month period that has really sort of stretched the dynamics, the opportunity, and the key reasons as to why student housing is an asset class of significant interest to international institutional investors. We've seen the likes of EQT Exeter investing in Spain, M&G in Italy, Commerz in Spain, Zior in Portugal, and Catella and others, and AXA in France. What is certainly sort of true to see is that the competition for existing assets in key cities could predicate further yield sharpening. But obviously that very much depends on the NOI, the net operating income that is being underwritten. And we expect that in line with the residential market as a whole, I think that over the course of this year, we really see probably sort of 25, perhaps up to sort of a 50 basis point shift in yields compared to last year. And that's mainly due to the weight of capital that is really focusing on the student housing market as investors race for built income producing assets, but also back developer operators in each of these key markets. So several questions I'm sure that will be answered by a panel of experts over the course of the next hour or so. What do institutional investors want? Are they only after investing in one or two, or perhaps two or three assets in each jurisdiction? Or is there the willingness from those institutional investors to look at more of a pan-European operating platform? Will there be a green premium as the investors themselves drive for ESG credentials, not just environmental, but looking at the social aspects as well and affordable rents? And I think this will be a key question that we can ask the panel later on, is whether we'll start to see the emergence of more university collaboration as there's a drive to provide what is still a chronic undersupply of quality PBSA in the space. And that's just not about Southern Europe, it's also about sort of Europe period. What are lenders doing? How are local lenders actually responding to PBSA and their understanding of the sector? We've seen one or two challenges in a couple of these countries, I guess, Italy and Portugal and Spain to a lesser extent now, as banks themselves, local banks, start to understand PBSA, how it's operated, and how the operators themselves ensure a steady stream of income during the life of the loan. And I think this is particularly important, as I say, in Italy, where and Portugal, that are very much at the start of the PBSA journey. And certainly, what we've seen is institutional investors really filling that gap of forward funding projects and enabling developers and developer operators to really bring their dreams, bring those projects to fruition. In terms of Spain, it's certainly been a very active last sort of 12 months, still with this chronic undersupply of quality accommodation across the board. Yes, institutional investors are very much focusing on Barcelona and Madrid, but as the panel will know, the market is far deeper than that, far deeper into tier 2, maybe even tier 3 cities, where I think there is huge opportunity for investors of all shapes and sizes to diversify their portfolios. Of note, latterly, we've seen Exeter EQT investing alongside Moraval in the search to develop a portfolio of up to 500 million euros over the next sort of 3 to 5 years. CA Ventures as well, looking at how they can build out their portfolio, all with different dynamics in terms of quality, in terms of rental price points, and themes that we're all starting to become far more aware of in this space. A couple of case studies I think sort of represent this quite nicely. We've seen on Payars, Barcelona on the right-hand side, forward funding deal by Commerz. That was their first foray into Spain in the student housing sector. A scheme of 743 beds at around sort of 97, sort of 100 million euro lot size. I think that understands the diversity of the institutions that are now searching for prime best-in-class projects in the Southern European markets. An existing asset that is currently sort of available in the market, although may shortly go under offer, is the GSA project in Madrid. A very rare opportunity to buy an existing asset in central Madrid that I'm sure has created a huge amount of competitive tension in the marketing process. And who knows, this may sort of start to reset yield profiles in Spain. But again, that comes with a caution about what the true NOI, the operating income, is that is being underwritten. In Portugal, a country that is certainly sparking a lot of interest, we've seen the likes of Milestone, Urbania recently looking to develop a 100 million portfolio in the country. We've seen the likes of Zeal, Temprano, Brookfield, and Roundhill Capital all developing projects which will be operational over the next few years. I think again, this will be a classic case of the market is far deeper than Porto and Lisbon, and we're seeing operators now looking at the likes of Braga, Cavillo, Liera, all looking at trying to capture the domestic market, the domestic supply of accommodation, not necessarily looking at the international market, which, as we know, has been highly affected by COVID over the last sort of 18 months or so. But there are opportunities there, and there are operators like Smart Studios, like Odelis from France. Now, Odelis have a different investment model to most developer operators. They will create, they will sign long-term leases on projects that brings in maybe a more patient institutional type of capital into the market, and will actually then be looking at some of those smaller schemes that for many investors may just be too small to invest in on a direct let basis. But I think the key with a lease wrapper, I think that creates some certainty of income to those investors, which is paramount to meet their investment criteria. Touching sort of on ESG, Milestone have delivered their LEED Gold certificate project up on the Esprella campus in Porto. Is this a sign of projects to come? Is this something that institutional investors and banks are really going to focus on as a modus operandi for investing into the space? Now, how important is ESG really going to be? I think this is something that we'll see, and we'll see other developers. We are seeing developer operators now looking at ESG and making sure that this meets key criteria, not just for investors and banks, but I think for the longevity of the sector as a whole. The student hotel, I can't go through the Class Foundation without a plug for TSH. Now opening in Carcavelos in 2024. That's alongside a number of other projects in Southern Europe, in Madrid, in Florence and in Rome, and I'm sure in Milan and elsewhere over the next few years or so. In Italy, probably a real emerging market. We've seen institutional investors during the COVID period forward funding direct let projects in Italy, which I think really gives a sense of optimism to the sector as a whole. The fact that M&G invested in Bologna, a 500-unit scheme signed during the midst of COVID in Italy, I think sort of says a hell of a lot about the sector and about the confidence that they, amongst others, have in the marketplace. Now, we're joined today by Hines and DoveVivo, both of whom, and Eri as well at Collegiate, all of whom that have got vested interests in Italy as a market. But again, sort of different types of opportunity, whether it's development-led or actually, they're looking at potential, large-scale mixed-use developments that student housing forms a key part of. And I'm sure Stefano will talk about the recent acquisitions in Milan up at the Bavisa campus. That I think that is this it's an urban regeneration opportunity, and student housing really provides the focus for potential 500 or 1,000 students to be parachuted in to one location and to really kickstart a mixed-use regeneration a development opportunity, and gives potential market share to for retailers, for hotel operators, and so on and so forth, as part of building the story around that regeneration project. Now, we've seen the likes of Campus, who and DoveVivo, who are initially very much focused in country, now looking at their expansion plans as to how they can grow their operating businesses across Europe. They're taking their first steps into Spain, into Portugal, and now into France. And I think this is a theme that we'll start to see. We are seeing those pan-European operators now operating at operating successfully. The likes of Collegiate, the likes of Milestone as well, covering sort of 2, 3, 4 different markets. And this again sort of gives real comfort to those investors looking to enter the market, that there are those operators that are building that track record, who can operate these assets on a solid institutional basis. In France, a market that many people have found impenetrable over the years, but Joe and AXA have managed to do that with the acquisition of Clay over the last sort of 18 months. And I think this is a market that has traditionally been built off the leasehold model. But again, we're seeing the emergence of the direct let sector there, and large scale direct let opportunities of 300, 400, up to sort of 900 beds, 1,000 beds being delivered by GMG, Brookfield, HPC partnership in and around the Paris region. I think this is, again, giving access to, it's a different way of accessing the market of developers in that country, knowing that there are other operators, investors who are prepared to take that direct let risk, rather than going down the same old, here's a leasehold model that we just want to back out to institutional investors. And for many operators, that means it's quite a slow churn. They can't actually get the traction to build their platforms at scale. And we often find, that you can sell these either unit by unit or institutional on an individual on block basis, and they can do 5 of these a year. But many of these operators want to grow both in country, but again, taking their skill sets across Europe, and particularly into Southern Europe. As I say, we're seeing that with Odalis, we're seeing the student housing sector, we're seeing that with Residitude as well, and also in the senior living space, which is a different conversation altogether. But because they're seen as being institutionally credible in country, that gives them a certain sort of strength, I think, in terms of delivering projects for developers in the Southern European markets. In terms of discussion points, well, I think we've got, I've put 4 up here that I'm sure we can chew over the next next 40 minutes or so. Now, co-living, what impact is that going to have on the student housing space and occupancy in particular? modular construction, bearing in mind the shortage of building supplies, certainly in the UK market, in the impact that that's having on the housing industry, increasing construction costs. Are we going to see more of a drive towards potentially modular construction? Is that going to be sort of quicker and easier to meet ESG requirements, especially for on-campus opportunities? And then that leads into what are there greater collaborations to be had with universities in each of these countries, and a move back towards more sort of PPP, PFI style projects, as many infrastructure funds are looking to try and deploy their capital into the housing space. But as I say, I'm sure all of those, maybe none of those, but I'm sure all of those will be discussed in some way, shape or form over the next 40 minutes or so. But enough from me. I think we'll get straight to the panel session.
Thank you, Marcus. That was extremely interesting, and really, really great to hear kind of so many of our partners investing, growing and flourishing within these kind of university cities and markets as well. I am going to head over to our amazing panel. So thank you, Marcus. Marcus will be joining us for the panel as well, Director of Savills. We also have Stefano, Investment Associate at Hines, Giulio, at COO at DoveVivo, Joe, who is the Head of Residential and Student Accommodation at AXA, and Eri, CEO at Collegiate. So what I would like to do is, in that order, if you just want to quickly say your name and the company that you work for, and tell us a little bit about the markets that you work in, so kind of bed spaces and countries that you work in. Stefano, I will start with you.
All right, thank you. As I said, Stefano Pagliani here representing Hines. As you know, Hines is a global developer. We're active in basically all the major countries in the world. With student housing, we're particularly active in the UK and Ireland, where our student housing platform, Aparto, is currently operating circa 5,000 beds. Aparto is also expanding to Italy, the country where I work in, and Spain. In Italy, we have two active sites, Giovenale and Ripamonti, which are in Milan. And then we're also looking at other opportunities, the most recent one being Povisa, as Marcus mentioned. This is a city-sponsored site where we're going to develop roughly 1,000 beds.
Amazing. Thank you, Stefano. Giulio, we're going to come over to you.
Yeah, this is Giulio. I'm the COO here at DoveVivo. We're currently operating in Italy, Spain, and France with both co-living and student housing. We currently have 8,000 beds under management. Out of those, more than 2,500 are within student housing building and proper student houses in Milan and other secondary cities in Italy. Plus, we just opened one building in Madrid. We are soon going to open one in Paris.
So very busy then. Lots and lots going on. Joe, if you'd like to give us a quick introduction, please.
Sure. Good afternoon, everyone. I'm Joe from AXA IM. We're a global investment and asset manager. And in terms of the student space, we have an AUM of circa €3.5 billion globally. In Europe, we have the #1 portfolio in Spain through the Reza platform and the #1 French portfolio through Clay, but we're also active in the UK, Germany, US, and Australia.
Amazing. Thank you, Jen. I'm really excited to hear your discussion as well from our earlier conversations. I think it's going to be really, really great. And Eri, finally, over to Eri at Collegiate, if you would like to introduce yourself.
Okay. Hi, everyone. I'm Eri Cuanalo. I'm CEO of Collegiate Europe. We started our journey in the UK 20 odd years ago, but Collegiate sort of over 10 years ago. We operate now primarily in terms of active developments in Spain, Portugal, and Italy, and we've got assets under early development in Germany and in some other sort of northern markets. We're active with a range of different investors, and so far we've also assisted in building over 10,000 beds in Iberia, as well as what we're doing now.
Amazing. Again, I'm really excited. I think we've got an awesome panel here today. We're going to start off the conversation with what's happening at the moment, the current situation, and how COVID has had to make us change and adapt. So I would really love to know from operational, from what you're doing with your operational models and how it's been impacted because of COVID. Giulio, I'd love to come to you and hear about how that's been for you.
Yeah, so I guess like everyone in this panel, we obviously had an impact on our day-to-day operation. So apart from the shock during lockdown last year, where we had a lot of students leaving our premises, we then recovered, but obviously a lot of stuff has changed in the past, I would say 12 months. The first one is obviously contract length. The model of the students coming and stay 10 to 12 months is not, at least so far, has not been happening anymore for obvious reasons. I don't know how it was in other geographies, but in most of the Southern European countries where we're operating with, university have been going on and off, and students didn't want to commit themselves for more than 3, 6, or maximum 9 months, comparing to the past where we basically were a minimum 12 to 14 months average stay. Second, I would say is the service that we offer had to change completely, from the cleaning, from amenities available, from outdoor spaces, from moving everything from, in some buildings, from double room to single room. So we had to reinvent also our product. And at the same time, we also on purpose decided to take care of our members with more community programs and more programs on the well-being side, mental health side, with a lot of seminars. We're still doing them to make sure that people keep up and are okay in our buildings. I would say it's not been easy, but at least for now, we are seeing some light at the end of the tunnel with the vaccination campaign going in the right direction, almost across every of our geography.
Well, that's really great to hear. And it's, yeah, that's something that we seem to be hearing more and more from the sector. These kind of community initiatives and the importance of community is becoming more and more prevalent. Eri, I'd love to bring you in and hear about how COVID's impacted your operational model.
Well, similarly, we've particularly in Southern Europe, but across the whole of Europe, with the restrictions on travel, with the restrictions on university openings, etc. And I think that impact's going to continue further. We've of course had to also look at flexible tenancy lengths, more sort of guarantees on booking, to reassure people that if the environment they come into changes, that they're not going to lose out in terms of money. But I think one of the things that is, of course, emerging is that some countries are more reliant on international students than others, and I think ultimately we're all really focused on serving the majority of students locally, with the international students adding to that. And I think the smaller countries like Portugal are affected more than countries like Spain that have and Italy that have a larger domestic market, But again, even within Portugal, you've got key cities like Lisbon that are, they've got great sort of local presence too. So it's been an interesting journey. I think we're going to feel the effects for a little while longer. And it's not just restrictions on international students. Of course, it's those restrictions imposed nationally so far that are not going to clear fully for this academic year coming.
Yeah, well, thank you for that, Eri. That actually brings me quite nicely onto kind of student numbers, and that universities are obviously reporting that there's going to be this drastic increase of student numbers. And it would be really interesting to hear from Stefano on what your expectations and what you think is going to happen in the market.
We actually see the same. So all the universities that we speak to, they all report an increase in numbers of enrollments for next year, which proves the fact that in moments of crisis, people tend to go back to studying. One thing that was actually pointed out last week, which is very, very true, is that we don't know yet if this spike, is really in the number of enrollments or if it's just an anticipation of enrollments, right? So it might be that students are just enrolling earlier. But if what they're reporting in terms of numbers is more or less up 30% compared to last year. So it's very, very big numbers here. This is for basically all of it today.
Yes, and I'd like to open the same question up to Joe as well. Kind of what are you seeing in regards to kind of student numbers?
I think we're seeing a bit of a mixed bag. We're definitely seeing, and as has been evidenced throughout the years in terms of the spike in the middle of a crisis, but we're also seeing a slight change in the mix depending on the country. So domestics versus internationals versus EU students, if you like, and where they're choosing to study. And some of that's guided by where they are in their vaccination programs. Some of that's guided through things like Brexit in the UK, which is affecting internationals and rates which are increasing versus a drop in Europeans. And some of that's also been affected by the local conditions that have been changing in terms of the increase of English taught courses, for example, which are attracting more and more internationals into other European countries that maybe were a bit lagging, if you like, in terms of English taught courses. But we're definitely seeing a spike in domestics. We've noticed that in Spain. We're pretty much in line with 2019 bookings for the 2021-2022 academic year. And then in France, very similar picture. Again, if I look at France and Spain, typically our portfolio and the students that make up that portfolio are 85% domestic and 15% international. So the reliance is a lot lower than it would be in other countries. So the penetration rates that are very, very low in these Southern European countries mean that even if there is a dip in internationals in the short term, you can more often than not replace those with domestic students just because it's such a tense market across a lot of the major cities. So the impacts on occupancy aren't anywhere near as bad as perhaps they were predicted at the start of the pandemic.
That's really interesting that you're saying that, Joe. So obviously you've come from an angle of maybe changing your model of moving into kind of more domestic students instead of international and being able to kind of weigh that up. One of the attendees within our platform has asked, would you consider mixing more student and professionals to survive? Is that something, Joe, you would do at AXA, or I know DoveVivo and Collegiate, you mentioned it as well. Is that?
I think we've got a fairly clear definition of student versus, I suppose, co-living, if you like, in terms of having young professionals in. But again, it is very dependent on the country. So in Germany, it's micro-living. It comes under residential class use. You can mix students quite happily. In certain countries, you're just not allowed to do that. So you have to stick to student. So in France, for example, we run a dual strategy of student and then co-living through Clay. So the same operator, but just clearly identifiable residences that sit in the PBSA bucket or the co-living bucket. But then you can look at other countries, and in Spain, it depends on the type of license that you can get. And if you've got a summer license or a short stay license, then you can merge those two and have short, medium stay and long stay for students in those residences. But it is very much on a case-by-case basis, country by country.
Yeah, really interesting. Marcus, I can see that you're potentially wanting to add something there. Do you have?
I mean, yeah, just really echoing, I think that on the occupancy side, I mean, what we're seeing on the ground, both from a bank perspective, but also from an investment perspective, is really looking at the strength of the domestic market. Are they, and it comes down to understanding the product. I think we've gone through that exercise of what is PBSA in Spain. Eri has been sort of fundamental in that education process, and obviously Joe and with AXA has been investing into that space. but I think, you know, when we're looking at, you know, particularly, you know, Italy and Portugal, really, so it's key to key for the domestic market to understand what is PBSA, what does it mean, and I think, you know, both banks and investors are looking at the rental more forensic now on the rental price points, but also, you know, looking at, you know, the ramp up, you know, how long is it going to take for a scheme to become, you know, 100% occupied or 97% occupied? You know, is there that reliance on international students, or no students from the US? And we've seen this in Florence as an example. There you've got many US faculties there that, you know, where the many number of the local operators were reliant on that cohort, which obviously isn't there, and they are now having to address their business model. So look, I think fundamentally the domestic market is very much there. It's just an education about what the opportunity, what is PBSA, what are the opportunities and that it brings to the student, but also particularly then to the university.
Well, thank you. That's a great segue into kind of having a look at the debt market and how that does work. Stefano, I would love to ask you what your experiences are and whether your experiences, you know, challenges in securing loans from local banks due to their thought process.
It's quite tough, both from, you know, Italian and foreign banks. You know, that they really don't have that much experience with the asset class, especially in Italy. So there's a lot of an education process that has to go through. In Italy, in particular, you know, we have a lot of town planning aspects related to student housing, which is a special asset class. So we basically had to come up with a lot of the regulation that we had to draw and write with the municipality. And so we had to walk the banks through all of this. And, you know, once you have the planning closed with the bank, then you need to speak about the market and how you're going to operate. And on this, I have to say that, you know, having Aparto as an in-house operator really helped a lot. It gave a lot of credibility towards the bank and also towards the municipality. You know, and that the bank, their main concern is how you're going to service the debt. And so they have a very, they pay a lot of attention on your NOI and how you're going to be able to service the debt. So on that, again, we had to have a lot of discussions. We had to bring in people, our colleagues from the UK and Ireland, to just walk through the process and how we're going to operate the student housing, make sure that we hit the financial targets.
Yeah, really interesting to hear that kind of educational process is really, you know, needed. And it's great as well, I guess, that you have the experience within other countries to be able to, you know, give evidence to say that this is a package that works and is tried and tested.
I have to say it's grown, so it's improved. The situation has improved. You know, when we first acquired Giovanale and Ripamonte, it was a really tough process, but those were the very first ones to do. Now it's a bit more easier. So, you know, when you tell them that you're talking about student housing, they don't jump off the chair, but they're willing to take the conversation.
Eri, I'd like to bring you in from kind of a Collegiate's point of view and kind of your experiences within these challenges.
It is interesting, you know, as Stefano mentions, you know, the educational process that you need to go through with banks and not just banks, other stakeholders, valuers, and so on is a big task. And you need to bring some credibility, and you know, he's got some credibility from Aparto, you know, operating in other regions. We're fortunate as well as operators, not just operators with long track record, but operators in pioneering Spain, pioneering Portugal, showing how we've worked in new markets to create new things that they do give that credibility, that those credentials a lot more importance, you know, particularly in Italy and Southern Europe, Spain, etc. Whereas in other markets, they don't really think enough about actually how am I going to get this net income, you know, and that's a concern, you know. I think they do go through a lot more rigorous testing of your fundamental rental assumptions, operating costs, occupancy levels, and how that's going to evolve, how you're going to stabilize a property, and that's going to work over time. But it has been a challenge, and one of the things that we've focused on is actually we've gone the other way, in that we probably primarily have residential permits, and we then use them for students, because we've always geared up our sort of offering to be more for young professionals and students, because we think they want the same things. One of the challenges has been for our students is that once they leave a collegiate property, where do they go? They want the same level of services and amenities, and so naturally they want to stay. And so we had a big, with the deputy mayor of Milan, he encouraged us very strongly, as part of the condition of approving our projects there. We've got 2 live projects. Please house young professionals, please, please, please. And so he knows, so that's helped a lot. But banks are still difficult institutions with lots of different levels, and most of them might get it, but you get to one level and then somebody doesn't understand it and you have to start again. So it's been frustrating.
So we're still working towards improving their knowledge and understanding around that, but it's really good to hear that there is some progression happening.
There's one other thing I need to mention about Italy in particular. We need to remember that Italy went through a really deep sort of crisis in terms of banking, when they were in a situation of granting 100%, debt, and that left so much equity and so much scar tissue that they're very cautious in the recovery process. So they've got a slight, a slightly more cautious approach than perhaps the others.
Yeah, really interesting, and thank you for that extra insight on Italy, especially. Yeah, well, we've kind of touched on banks. I would really like to talk a little bit about the universities. In a recent survey from the Class Foundation, we surveyed operators and asked about what their communication had been like with universities over COVID, and 100% of operators had said that had intensified, which is obviously amazing. But when we actually dug a little bit deeper, there was a good kind of dialogue around COVID, but actual student numbers, and if there's a new build, and if there's new investment, and the relationship between the university and housing students, there was still, quite an unsettling gap where there wasn't much kind of knowledge or understanding, or even they thought it wasn't their responsibility. So I think I would really like to discuss with you, Joe, is kind of how we can improve these relationships and how they can be maintained. And Marcus mentioned kind of these creative collaborations and how important they are.
I think ultimately dialogue with institutions with universities is key. And we've talked about education of banks. It's the same with universities. They're not used to PBSA in certain countries, certain markets. Some area will attest that don't want to even speak to any operators, developers, institutional capital. They'd say it's not our problem. You deal with it. I can think of Germany, where we've approached universities there in the past, and they've just palmed you back off and said, no, we've got the Studentenwerken, which is their version of the subsidised, if you like, social housing for students. But what we have seen is that the COVID pandemic has actually helped to break down some barriers, open some doors, and through the operators being proactive with universities in terms of not waiting to be asked what are they doing in terms of regards of welfare to their students, but actually the operator coming forward and saying, this is what we're doing, this is what we've done, this is how we're keeping them safe. That started to sort of build some trust. And then I think it's really important with projects and new schemes that you want to bring online, involving them at the earliest point, not for their endorsement, but to let them know, because ultimately they have the power to sway students' minds as to where are they going to stay. And even if you can't get a nominations agreement like we know them in the UK, and there's a lot that are reluctant to do that, they can still not put you on their website, not refer to you in their literature and in their contact to the students. So it's key that that line of communication is very much open and alive and two-way, and invite them into your properties when you build them, show them what the students are getting, and it's all part of that education process, which I think is really key. And I'm sure the other operators on here will have attest that you can't just think that you can go it alone. You have to involve the universities.
Yeah, thank you. I think I think it's becoming more and more evident that us talking about the sector with these stakeholders is the most important objective there. I'd really love to talk a little bit about the lack of affordable options across the sector for students, because this just I attend lots and lots of events and listen to lots and lots of discussions, and affordability keeps kind of being thrown around, and really whose responsibility is it? So it's quite interesting that we're talking about the universities, but also from a private provider's opinion as well. So Giulio, I'd love to hear about how you think we should tackle this issue, and yeah, what are the real, what are the kind of resolutions that we can implement here?
I would love to have the perfect answer, but I'll try to go through this. Obviously, I think in some geographies, I would be lying if I would not say that that can be an issue. I think it depends on what we consider, on from where we look, from which side we look at the affordability, in the sense that if we are pretending to have a room in the center of Milan, London, Madrid, or Paris at an affordable price, I think even for normal people living there, it's something that it's never going to be happening. So that's something that we need to remove from the misconception that is coming from some municipalities, also in our geographies, where whenever we go, people are thinking that we are going to increase renting on the market, when the reality is that it's not. But I guess one way to tackle this is, first of all, comparing to the traditional residential model, because if a student is not coming to our premises, and I'm talking for the panel, I would say they go probably traditional, and they need to go through a really painful process of renting out for themselves, in some cases furnish them, in some cases paying the bills. And addition, if you look at the price, in the end, our price is not less affordable comparing to a traditional solution. But on the other end, I think that for me, one of the best ways to do it is optimizing the way we construct, that we build premises, both on the density side, meaning more common areas, maybe rooms that are not of 50 meters, maybe with 20 you can survive even less, but having a lot of outdoor space or other type of space is definitely something. And on the second piece is, unfortunately, I don't want to say unfortunately, but the bigger you go, the better it is, the more we can give a better price to user. So to me, one of the things we need to probably work more on, and I'm talking for ourselves, is working with municipality and making sure that when it comes to building, sometimes building one floor more can make sure that we can give an offer and a more affordable price to the final user and to the student. Otherwise, sometimes, with the limitation that we have in place, it's not going to be easy, because in the end, we need to manage also our P&L and our company. I don't know if I answer, but I don't think there is a perfect answer, to be honest, but these are the ways we generally look at it.
No, I think it's a good way to look at it, and you're tackling it from lots of different angles, and I don't think one shoe fits all, and I completely agree with that. What I'm going to do now is we do have some questions from the audience, so I'm going to open that up. But just to let the audience know, we are also going to ask you guys to answer a poll. We are asking what you think are going to be, what's going to happen within these markets in the next year to 2 years, so the short term. So please go ahead and answer the poll in the polling section. So the first question we have is from Adam Walsh. How important would be opening up to CTR to manage occupancy gaps and summer, particularly as students are more reluctant to commit for year round? Would anybody like to tackle that question?
I'll have a crack if no one wants to talk, but I think, short-term rentals, summer business, I'm pretty sure that for most of the operators on this panel and most of the operators that exist, it's already part of the business plan. It's you know, the days of 52-week or 51-week contracts, Europe, well, they were never there, and they're certainly not there now. I think business model has to be that you have a portion on long stay, 9 months, 10 months, if we talk about Spain or France, for example, and then you do mix that in with some shorter term lets. The thing that you have to be conscious of is the costs associated. So the underwrite for that summer period and that short term business looks a little bit different. You know, occupancy expectations, OPEX costs, staffing requirements, the requirements of the guests. But ultimately, you know, sitting above that, you're dictated to by the terms of the planning permission and the license that you're granted per asset. So that can look very different. Tourist use versus only student use in the summer mean two very different things, two very different markets, two very different models, and two very different sets of costs and expectations.
Yeah, I think you're right, Joe. I think what some people forget is the additional cost incurred for those shorter term lettings. You know, the turnaround either nightly, weekly, or semesters. You know, that comes at a cost both operationally, but then on the rental price point as well. You know, you've got to cover it somehow by maybe some of the 10, 15, 20%, as numbers above what your term time or your annual rental price point is to cover that. But you're right. You know, there's challenges around VAT, planning legislation, etc. that will impact all of that.
I think another important point to add to this is, you know, if you've got a residence that's primarily for students and young professionals, you've got to be very sensitive about who invades their space at certain other times of year. And so ideally you want to have the same type of people, and you want to make sure, like, for example, we had a situation years ago in the UK where we had a large building that was a nomination, but it was going to be late. So we had to pull the nomination and do some short-term lets. Now, of course, it was a big building, and then, of course, you realize that hen parties and everybody wants to be in this place. So you've got to suddenly slow it down and just realize that it might not work. That was one extreme, but also if you're looking at another extreme where you've got young professionals and students sometimes like to party a lot, but if you suddenly bring in families or something, it's quite a different context. So you've got to be very sensitive to that, and I think we really try and keep it to the same type of people, and we try and ideally limit it. As Joe says, sometimes you've got no choice. You've got to get that income. Sometimes you've got no choice because you've got no permit to allow you to operate that. But certainly, we have an interior team of architects. So we have 4 in-house architects that just work on optimizing concepts and residences, and they need to make sure that in our internal designs that we give out to exterior architects, that they're able to adapt in future if there's changing environment situations, if we need to comply with how a short-term hotel operates, etc.
Yeah,
and
really.
then I think the reliance on short-term income may then have an impact on the type of investor that you can that is there to back the development, and also then the bank funding. You know, it's, well, what are you? Are you a hotel operator in disguise, or are you a student housing operator? You know, it's all intertwined, and you know, there's that's all the stuff that needs to be considered at all aspects of the the capital stack.
Great, thank you so much for answering that question. That was a really interesting conversation. I would love to hear about what the predictions and forecasts are for the future investments and growth within each of these regions over the next 5 years. I'd like to kind of discuss about the strengths and challenges that we may face within these markets. So I'm going to start off with Spain, and Giulio, would you like to give a quick overview of what you're spidey senses are telling you?
So let's start from us. On our end, the idea and the plan is to get to at least between 5,000 and 6,000 rooms by 2024. I think the major issues are two. The first one is obvious. When are we going to really be fully recovered from the COVID situation? Because even if in September we see spikes and optimism, whatever, but a lot of students, especially from abroad, are not going to come back before 2022. So we need to get out of this at 100%. And the second piece sounds obvious, but even if it's a large market, finding a product that is going to be enough for everyone in this room, but in general, obviously it's not. It's the challenge, you know, especially for us. We are an operator, we are not a developer. You know, we need to maybe marry someone to make sure that we can develop our pipeline with someone on the developing side with strength. And I would say that's pretty much it.
Thank you. Joe, I know you work within the Spanish market as well. I don't know if you would like to add anything to that.
No, I agree. The Spanish market, I think, over the longer term or medium to longer term, is still very interesting. There's still an undersupply. I think what's changing now or starting to be discussed more is that affordable piece and what type of developments and investments you want to make in the country, because we've seen over the past few years quite an increase in the premium end of the market, and obviously some of that stock has suffered during this pandemic. And whilst we shouldn't be guided by the past in the future, we should be mindful that if there is a lot more focus on domestics, because that market is increasing across most of the countries in Europe, that we should be catering for that market, which don't have the disposable income that the internationals would. So it's just something to keep an eye on in terms of the type of stock that people will be investing into.
Yeah, so how do you think you would tackle that? So obviously there's the growing gap between this high end and lower end stock and portfolios. Would you think having a more diverse and varied portfolio would be a way to solve this issue?
That's the easy answer, if you can get it. If you can get the stock at the right price. The issue is that a lot of factors out of your control are going up. So vendors' expectations, and this applies equally in Italy, where even more so in Italy, where some of the vendors there believe that they're actually in Spain and trying to sell you at Spanish pricing, which makes it very difficult. But if we stick to Spain, it's a real conundrum. And speaking from an investor perspective, you want to be in those big cities which give you the liquidity that you require, which enable and facilitate lending should you need it, and you know that that's where the highest concentration of students are. But we're seeing more and more investment into what's called tier 2 cities, which are still very strong student cities, where you can still find land at affordable pricing and therefore reflect that in the rents. What you've got to really analyse is what is the growth of that market in terms of student numbers going to look like? What will the future look like in terms of, will students migrate more to those bigger cities with those institutions that are ranking higher in the global rankings? Is that going to attract them more, or are they going to stick more to their, to regional cities that might perhaps have a specialism in a certain subject? And that's the finger in the air piece that we're all trying to predict, while still trying to buy into, acquire and develop into liquid markets, and still maintaining affordability. But costs, for example, not just vendor pricing, but construction costs increasing. It's quite a difficult conundrum to be in. But
It is. Ari, I would love to bring you in about Portugal and have a little bit of an oversight about what your predictions are there.
Well, just a little tiny bit on Spain, which affects Portugal too. I think, and you mentioned affordability. I think the key to any of these sectors is you've got to segment the market. You've got to provide a range of choices at different price points, because that's the reality. That's what all mature markets are based on. And you've got to do that. And of course, there'll be the biggest demand for cheaper rising up. I have a slightly different philosophy that I don't think you need to provide, that I want to provide high quality, not necessarily high price, but high quality. So our philosophy is always on delivering the highest quality and looking at different sort of densities, etc., particularly within bigger schemes where we can provide different pricing options. But you know, the fact that an investor or sales, whoever is selling an asset, might max out the rents because that makes a great return on their investment, is not necessarily how we design projects at the start. I think the key is we've got big issues like rising land costs, rising construction costs. But as Giulio said, you know, we can get away around a lot of those through scale and through some innovative policies like, you know, in Milan, they give a little bonus for energy efficiency, but also sometimes in our scheme, you can have a bit extra, you know, buildability if you do cheaper rooms, you know, so you can do it through that way. But at the end of the day, I don't think we should compromise quality. I think we need to segment the market, and I think, but it's going to be tough because of investor expectations.
I completely agree with you, Eri. Did you want to give a quick overview of what your future predictions are for Portugal?
Oh, sorry, my apologies. I think Portugal is a great, strong international market. I think there's going to be some indigestion for a little while, given the problems with limiting students from Brazil. Brazil is a very strong source country for students. I think Portugal's recovered well from the crisis, but it's got a way to go in terms of people not being able to reach there. I think amazing world cities like Lisbon, Porto will be okay, but again, you've got to be very careful about the type of product you put in there. Lisbon will take more higher end product than Porto. One of the dangers, you know, and we're partly guilty of it, is that we went and helped develop a lot of very high quality stock, but much of it's trading at a very high price. And if the only option is high price, it's fine at the start, but that's going to start to segment and mature, and you know, we can overcome some of the problems of revenue with yield compression.
Great, thank you so much. And Stefano, for Italy, if you could give us a 30-second overview. I'm just conscious of time.
Yeah, I mean, we said this at the very beginning. Italy is a very non-mature market. You know, the numbers that we always keep in mind is Milan, 200,000 students, 6,000 beds today. You know, if you look at Bocconi, which is an international excellence, 15,000 students, 85% of these are not from Milan. They still only offer 2,000 beds. So it's that the market is there. The market is huge. We as Hines, you know, we have these 2 student housing that are currently under development. That's roughly 1,300 beds. Our goal is by 2024 to more than double this. So we have Bovisa, we have Milano Sesto, we have a few other investments in the pipeline. We roughly have 1 billion euros of dry powder to invest. And then, of course, we want to expand outside of Milan.
Great, thank you so much. And finally, Joe, if you would love to give us an overview on France and what your predictions are for the next 5 years.
Well, so from our perspective, market is very positive. We expect nothing to change. It will continue to grow. It's a very large student market. It's very underrepresented. Mark has touched on it at the start in terms of we're seeing a lot more local developers that are looking to partner up, where they've got land and they're looking to build that out. You know, we've seen an increase in 30% over last year in terms of the number of opportunities that are coming to us, and that's an increase of 50% over the previous year. So there's certainly opportunities coming. I think there's some changes in the legislation which have helped, i.e. conversion from office to residential, for example, which is bringing up more opportunities in maybe those secondary locations which would not be ideal for offices, which could be ideal for co-living or for student. And also the additional buildability that you can potentially get on those as well. You can get up to 20% extra on the existing floor plate. So again, that starts to make it interesting, because traditionally in the past, residential versus student couldn't compete in terms of pricing, whereas now there's a few things that are starting to swing towards PBSA's way. So, you know, the future's bright, certainly from a French perspective, and we'll be continuing to invest.
That's really great news, and interesting to see that the audience in all markets have voted that they believe there will be an undersupply for this year, but really optimistic by the sounds of from our panel discussions for the coming years. I just want to thank you all so much for being a part of this discussion, Marcus, and thank you for your presentation right at the beginning. That was really, really interesting. Please carry on the conversation. You can LinkedIn these people and LinkedIn us, and if there's any questions that you have, we can continue this conversation. It is really always great to hear about what's going to happen within our sector and market in the next coming years, and I am extremely optimistic for all of these regions. If you would like to learn more about what the class is doing, please head over to our website or follow us on LinkedIn. You can find out more information there. And we hope to see you at future events. If you would like to reach out and have any kind of interest or ideas yourself, also please feel free to drop me or the team an email. So I wish you all a great day. Enjoy the rest of the sun, and I will see you next time.